The other communications include, as I said, inflation and growth forecasts. Now, every other meeting for the ECB and the FOMC, they provide, the staff of the central banks provide their inflation and growth forecasts. And the Bank of England does it at a separate press conference, and that is called the quarterly inflation report. That also is as once a quarter, so that's every 3 meetings for the Bank of England. And we've also got then just general speeches by central bank members, such as Janet Yellen would give a testimony before Congress. Mark Carney of the Bank of England has to sit before the House Select Committee into Financial Services. I can't remember what it's called, whether it is called that or not. Who knows? Anyway, but basically they all have to answer questions to the MPs, and that again can give you a leading influence on what the central bank monetary policy is going to be. And finally, also committee members give their own speeches as well, it's basically that is the point at which you start to get a history of what the specific members have in terms of their opinions, because it's very interesting going forward in terms of how the voting makeup of the certain committees are. Now, the current voting makeup on the FOMC is there are no natural hawks actually sitting on the committee at the moment, and that is interesting, and I'll show you a table in a minute that just shows you that. There are actually just pretty much 2 centrists, which are Lacker and Powell, and most of the others are basically classed as dubs. So that would suggest that there is a natural tendency towards leaning on conservative moves in terms of central bank monetary policy and tightening. Now, in terms of the ECB, now obviously 2014 was, it was well chronicled in terms of the battle between Draghi and the Germanic hawks such as Jens Weidmann, in terms of how the ECB would go with regard to their quantitative easing move or their monetary policy easing. Eventually, Draghi appears to have won that argument, because obviously the ECB has subsequently eased monetary policy further. Let me just have a quick look at some of these questions. Brilliant. Nothing. Sorry, no, I was just reading a couple. Right, sorry. And finally, the Bank of England. There are 2 natural hawks on the Bank of England, Martin Wheel and Ian McCafferty. And there are other 2 that are slightly dormant, arguably, which is Kristen Forbes and Nemet Shafiq. And it's interesting because there's only 9 members on the Bank of England MPC, so that would suggest that it maybe wouldn't take a great deal for them to start hiking interest rates, because Martin Wheel and Ian McCafferty have a history of having hawkish stance, and then Forbes and Shafiq are considered to be on the brink of turning hawkish as well. So it would only need one other member to turn hawkish in order to get an interest rate rise on the Bank of England. So very much worth watching out for the Bank of England meeting minutes in terms of how they're voting. Wheel and McCafferty have recently changed back from looking at interest rate hikes towards keeping flat, but Martin Wheel is still sort of teetering on the brink of going back again. And subsequently, as I said, member speeches can be key. So what you'd be looking out for is when a dove makes a hawkish speech, and that would be something that the markets would take notice of. And on the other way around, you'd be looking out for a hawk making potentially a dovish shift of stance, because all these things can have a big impact on the meeting, on the voting structure. Now, what we have now is this table was taken from last year, actually, sort of sourced from Deutsche Bank, and it shows you the Federal Reserve FOMC makeup of the voting members. That's key in itself, voting members, because there are 2, 4, 6, 8, 10 voting members on the FOMC, and then there's another, I think, 8 or so non-voting members, and they basically go on a 3-year cycle of in and out of voting. on a number of them. I think it's 5 of them are on rotation at any one time. Now, what you can see here is this is the scale of dovish to hawkish. So dovish being 1, hawkish being 5, and you can see that they had 2 major hawks, Charles Plosser and Richard Fisher, and also Loretta Mester was a sort of a marginal hawk. But they actually got removed on rotation from the FOMC last year at the turn of the year, and they were replaced by Charles Evans, Jeffrey Lacker, Dennis Lockhart, and John Williams, all of which, apart from Lacker, all of which were doves. So all these hawks were replaced by doves on the committee, and you can see the average ranking here that Deutsche Bank have given them. The change from 2.6 to 1.8, so which suggests that the FOMC is naturally dovish in its makeup, and that is an important thing to remind people, because regardless of what's going on in the markets, if it's got naturally dovish members on the FOMC, then that may well mean that monetary policy's tightening is sort of slightly delayed potentially. So that is an interesting point to note. Right, now the impact of monetary policy on the markets. Now, central banks have had a more of an impact in recent months on the markets, and certainly since 2014 this has been significantly the case. And the question is why, and the answer is policy divergence is massive in terms of currency moves. When you have 2 central banks on the currency pair, such as euro dollar, ECB and the Federal Reserve, when you have 2 central banks that are going in opposite ways in terms of their monetary policy, as you do at the moment, that can have enormous impact on the currency. Now, what we have at the moment is the ECB, which has just engaged 60 billion euros of quantitative easing every month for the next 18 months to take it to 1.1 trillion euros worth of quantitative easing. And you've got the Federal Reserve, which has finished its quantitative easing, and it's now on the brink of looking to tighten interest rates, looking to increase interest rates. Now, the difference in that is enormous in terms of all sorts of markets, really. That has a massive impact on bonds, on treasuries, on sovereign eurozone debt, and also on the currency as well. And that has a big, it's a big move. And basically, the FOMC is not alone in this. It looks like the Bank of England is also beginning to sort of move towards tightening in 2015, and it certainly looks as though the likelihood is that's going to be at the earliest probably Q4. I'm going to put my neck on the line, maybe Q4, and you can get a gauge of these things. And what I'll do now, very quickly, actually just come up with this. Look at the Fed funds for the. This is the interest rate expectations. I don't know whether you can actually see this. It's not. I apologise if you can't see that. But basically, the Fed funds interest rate futures can give you an idea of when the market is expecting the rate hikes in the US. And at the moment, you're sort of looking out for, certainly when you get back towards sort of the bottom. You take, basically it's the opposite, so it's 99.75 would be a 25 basis point interest rate, and then 99.5 would be that one that's just turned yellow there, 99.48 is basically when the market is sort of almost guaranteeing that is going to be where the interest rate's going to be at that time. So December 2015, they're sort of saying almost nailed on that it's going to be then. So it's when you start to move away from this. As you can see, in August, you've dropped below 99.75, so you're beginning to move into Q3 2015 is when the market is beginning to expect the rate hike. So Fed funds interest rate futures are interesting on that.